watching famous Dave on YouTube.
Good afternoon, fellow traders, and we've caught a pretty wild Friday in the markets. If you are a trading freak like I am, then you woke up early to find action, or you were anticipating action out of DWAC. DWAC came to everybody's attention yesterday or sometime recently due to its association with the former president and a bunch of people piling into this media group type stock. We can see from the chart behind me, if I get out of the way here, this thing just exploded yesterday. Before yesterday, it was trading around $10. In yesterday's session, it gapped up to 44, and then after the close, it was just building and building. I kept seeing updates. I'm still not out of the way. So here's the chart. This is DWAC, and you can see just this big run up here. And this was news all over the place. Now, if you're familiar with me, then maybe you know that I've had a short position in GameStop for like 6 months. And I wake up every morning at 4 a.m. being a crazy trader and see what's going on. That's when the markets open. And this morning at 4 a.m., when I pulled up GME, the stock was offered way lower. Take a look at this chart now. If we go to the 1 day, you can see, let's go to a 5 day actually for a better thing. But anyways, you can see it was offered way down here at 4 in the morning. And, you know, I was excited being short, but it only traded just like 1,000 shares down there. So I fell back asleep, and by the time I woke up again, it was back up to like 175, but still exciting, right? Now, just to give you a little history, it hasn't been a great week for me sitting on this short. The last 2 weeks, actually. If we go back 20 days here, we can see from this low around the 6th of October, it's just gone up every day, it felt like. And you kept seeing these, it would try to rally and then it would fall apart. So here it tries to rally and then it gives it all back. It gives a lot of it back. It keeps trying to rally and giving a lot of it back. And I noticed these days here, there's kind of like a volume spike in the morning. It felt like it was starting to turn here because you had big volume, and then it didn't follow through. You know, it rallied, especially this day here. It rallied in the morning, and it just wasn't like taking off to the upside. And I put all these charting tools on this. I'm not into charting patterns and whatnot, but just to show you here, let's see if I can get them to pop up. It's hard to determine why and when these charts sometimes pop up, but let's take a look here. It's not really doing it right now, but essentially we were in this upward sloping, let's see, select patterns. All right, so this is different than my one in the other room. Let's see if we can add these really quickly. So it was in this upward trajectory here for a while. Let's go to 20 days. Here, you see these yellow lines. It was kind of like in this upward trend, right? And you could feel it from these days down here. All of a sudden it had turned around and I was like, uh-oh, this isn't good. Being short, it was showing me losing money. We're going up, up, up. And people had been saying for a long time that this was part of a pennant, right? That something was going to have to break one way or the other sometime soon because the range was narrowing and narrowing. If we kind of back this up to the 3-year maybe, well, you can kind of see it here. It's kind of narrowing and narrowing, and something was going to have to break one way or the other. And so in my mind, that meant that if it wasn't moving higher, if it was just moving sideways, then that was kind of a victory for being short because it would kind of collapse lower at some point. But this is all kind of idle speculation. I don't really believe in charting all that much, but you can see this upward channel here that it kind of broke out of. And it's all started with this kind of turnaround day here where it got to 192. And then, we've seen stuff really break down here. Now, to refresh your memory, I am long the 170, 160 put spread in January. And I actually rolled it out to January. Now, this trade, I used to have the December 170, 160, and I rolled it out to January. And that trade was a good trade for me. No, I'm not like patting myself on the back. Well, I guess I am for that one trade. Rolling this out, I paid an average of 40 cents to roll the put spread out from December to January. And right after I did that, that spread widened to almost $1. And the reason for that was that people started to give up on this December stuff and volatility came in. You can see if we look at the chart here for December, you can see volatility. This is the average per month on the right here. You can see December down to 86. Well, that was up around like 95 or something. And January was up around 103. And it just started to collapse. And so it was fortunate for me that I rolled these spreads out because just a couple of days later, the spread widened a lot. So I kind of avoided a bunch of December decay. And in my mind, I still have the same number of spreads. Well, I have one less spread. I used to have 30 spreads. Now I have 29. And one of them is rolled down, 5 points. But I basically spent a few $100s to roll this out and give myself another 30 days. And this chart now is looking good for us, right? We can see it kind of collapsing here. Now, a lot of the speculation, and this is possibly true, is that people took their shares out of this morning to try to jump in on this DWAC thing. And, I don't usually give people advice, and people don't listen to my advice anyways, but if I were to give advice, I would say stay away from this. I saw somebody's post on Facebook, and I'm not going to look it up right now, and this guy was saying, I researched all these stocks, I picked some quality companies and put my money in them, and the quality companies didn't do anything, and these people bought this DWAC, which shouldn't be going up, and it did, and it's just not fair. You really can't think about things like that in life. There's always going to be opportunities that you miss and other people get, and, A, life is not fair, right? That it's just an obvious point. B, there's always going to be missed opportunities, and people that quote unquote don't deserve it are going to make money on things more than people that quote do deserve it. But in a sense, somebody who traded DWAC and bought shares of that deserves to make money just as much as anybody else, right? They're putting risk out there. If I were to walk in right now, DWAC here trading 104, and buy shares, I'm taking risk, right? This could tank right now down to 40, and so who deserves to make money trading is just not an area that you really even want to go to. It's not really about deserving anything, right? So, get out of that mindset. I want to talk about this fun. Now, fun is associated with DWAC as well. And if you remember, if you've been following me for a while, we talked about fun a couple years ago. It had a spike to $550. Let's see, it was about 3 years ago. It had this huge spike due to illiquidity. And this is kind of like an example of what we're seeing with DWAC and some of these other squeezes here that happened a while back. And most people that are talking in the chat rooms about fun today were not even around for this spike here. But I remember this spike here, and I actually traded this way back when. But the chats and the stuff on StockTwits, now, take it with a grain of salt, my opinion of stuff. People would say that I'm a product of, the hedgies and all that stuff, and that I'm, a dinosaur and all that stuff. But to me, when most of what is put up on these forums right now seems completely misinformed to me. Hey, what's up, everybody? I'm coming back to UVXY and the Stack GG. Most of the stuff and people's tweets are not tweets, but people's StockTwits posts are really misinformed, and people saying that fun is going to go to thousands of dollars and stuff. Be very careful with these. It is the odds are that this fun stock is just going to collapse back down to below $1 very quickly. Now it could go up for a little bit, but I would be very careful with these. You're playing with fire, and so if you're going to jump in on these and try to scalp them, if you get burned, it's on you. It really is. Certainly, people have made money jumping into these, and the way to make money seems to be as soon as you hear about one of these, jump in early. Then when everyone else hears about it, get out. But it's a risky game, and it's not a game that I'm interested in playing. Now, I was going to go through a couple of these StockTwits for a little bit here and take a look at some of this stuff. And then I will get back for GG and talk a little bit about UVXY. But let's just take a look here at some of this insanity because I just find it amusing. And be aware of these people saying that they made $200,000 this week and joined their groups. These people have an ability to be so positive. Every down move is a buying opportunity and a discount and great news. There we go. GME looks like a discount today. Great. And there's so many YouTubers. I've watched a lot of these YouTube videos, and so many of them are just making up reasons why you should be long this stuff. And that's being put out there as legitimate financial advice. People saying that, and the other thing I'd just be aware of is people saying that this X, Y, or Z is definitely going to happen tomorrow or the next day. Nothing's definitely going to happen anytime. So when you hear stuff, something's definitely going to happen, you have to know that that person either is knowingly lying to you or that they just don't get it. Because you could kind of put odds on something maybe, but nothing is ever definitely going to happen. I would listen to this person. I would never sell. I'll hold and buy harder. We're relentless. Ape Nation, these are your plays. Don't get distracted by shiny objects. They're all FUD tactics. As if every person... Another one I saw that was pretty funny is that kind of implying that any person that sells these is short it and is putting all this money to try to manipulate the price lower. What's to say they don't halt us when the squeeze begins and it never really takes off? I've got news for you folks. The squeeze already happened in GME and AMC. Why don't people... I don't understand why people don't realize that. This huge, amazing squeeze happened and people made tons of money. It was one of the biggest squeezes of all time, and it happened in February. Right here, it got to 483. So saying like, oh, the squeeze is going to happen, it already happened. That was the squeeze, guys. Look, we're coming down off it, and this will slowly, in my opinion, this will slowly grind lower. A model to follow. Other stocks that have taken off and then ground lower are Beyond Meat. Let's take a look at that one. We were trading this a couple years ago. Big pop, ground lower. Tilray. Now, my buddy made $1 million in one day in this Tilray pop. And that's not the pop there. This was a while ago. It got up to here it shows 144. My buddy made $1 million buying this as it went up. But look, just grinds lower, grinds lower. This is the future that I see for GME. All right, so let's talk about volatility in the VIX right now. The VIX is in lower territory. We got down below 15 in the last couple of days. Let's take a look here. And there's a couple of things you can say about this chart. One, I would not be picking bottoms. This can continue to certainly move lower. Two, we are at the low end of the range for recent times, right? So not surprising if we get another pop at some point here. The VIX obviously is related to the general market. So I like to pull up the /ES as a proxy for the general market, that being the E-minis. And you can see this is a 3-year chart of the E-minis. And, we get some down moves, but in general, moving straight up. And that speaks to the VIX being in lower territory as we just continue to move higher. We've seen UVXY break 20 and move lower right now. UVXY, I think around, 1690, amazingly, right? And this is the story of UVXY here. It's going to continue to just move lower like this. You can see the spike from 2020. And this, I was talking with somebody who was trading TVIX at this point. Now, TVIX is gone, but TVIX during this pop here went to 1,000, right? And this is adjusted after splits to 1,000, but it didn't really get there. If you unadjusted from the splits, that would be the equivalent, I think, of 10,000 for this. But TVIX, 2 times leverage. This only 1.5 times leverage. This used to be 2 times leverage, but only 1.5 times leverage. But we will continue to see this just move lower. And this is due to several factors, the main one being the effects of contango in the term structure. So if we go to VIX Central, run by programmer Eli Mintz, who I'd love to have on the show, but hasn't happened yet. We can see contango continues down here. If we look at this chart here, this is going to show us the different futures. These are the different VIX futures, and you can see that they are arranged in an upward slope. And when they're arranged this way in an upward slope, that means that they are in what we call contango. And we look at the bottom here, we can see this number at the bottom here, which I'm showing with my pointer, shows the relationship between these first two futures. Now, UVXY and VXX and SVXY are based only on these first two futures. These other futures here might give you some information, it might be interesting, but the only thing that these are actually based on are these two futures. Now, once a month, one of the futures expires and it rolls out. If we go to the VIX here, we can see I've got on my board here different VIX futures, and I'm trying to pull up. Let's see. All right, let's go and take a look. I just want to illustrate to you that these front futures are important, and they trade a lot more than the back month futures. If we go to barchart.com and we look at VIX futures here, we can see the volumes, daily volumes for VIX, right? And if you look here, the volumes follow what I'm talking about. Here we have the front future, the NOVE future, traded 47,000 contracts today. The second month, the Ds, trading 27,000, and then it drops off. Look, 7,000 for Jan, 3,000 for Feb, and so on and so forth, drops off. Now, usually, in fact, almost every year, we see a dimple in the VIX term structure when we're talking about December. Now, this is usually due to the fact that December has a bunch of holidays. So usually we see it's not like the straight slope. It's like December's lower, but we're not seeing that this year. It's actually smoother. And really, this whole trade of being short, getting short UVXY or VXX and riding it down has been working great for a period of time now. And in fact, this has been a great year for that after a couple bad years. The last 2020 was a bad year for VIX products, and 2019 as well, partially due to the COVID and spikes regarding that. Let's see if I can pull this actually out to a 5-year chart here. You can see the spike which I'm alluding to. Let's go to 5 years. Well, in a 5-year, because of the effects of contango and all of these splits, that spike looks like nothing, right? So let's let's see if we can do maybe a 4-year. If you move out too far, the fact that, the effects of contango just make it look like totally flat. So there's 4-year. You can see just this disruption of 2020 that's really rocked everything. Now, we had a similar kind of disruption in 2018. 2017 was another beautiful year, but since that spike, we've just moved lower and lower in a pretty organized fashion, and thus getting short these products, if done in a thoughtful way, has made money. It really is a proxy for being long the market, and has some advantages. My traditional way to do this has been to buy put spreads. Other people sell calls. Now, selling calls is a little bit riskier, but there's more reward associated with it as well. But some people will sell calls, naked calls, and that works for some people as well. So that's kind of the situation right now. This DWAC, this is a musical chairs type situation, which somebody's going to get the chair pulled out from under them. Don't let it be you. Be very careful. If you're going to mess around with this, realize that you're messing around with it, and you can get caught very easily. So I would be very careful to play around with these. Same thing with fun. I anticipate these things just fizzling out pretty quickly. I think that like GameStop and AMC are the real exceptions here that have kind of had some legs, but I think they will fizzle out as well. If you were going to be investing, I would invest in quality companies that have that are making money and have good future prospects. These meme stocks, they're a fast money thing, and fast money in means fast money out, so I'd be very careful. Let's go to the comments a sec before I leave. Volcano God is angry. Pattern, how long? Let's see. Yeah, we'll see how things close today. I still haven't made any moves. I was thinking about kind of selling something against my position to kind of lock in a little something, but I think I'm just going to leave it. I've been hanging out for months. I hung out when it went against me, so maybe just hang out as it goes for me. I haven't made a trade in a bit, just leaving my short on. Right now, it's showing me short 158 deltas, paying $20 a day, and down 10%, it shows me making $4,000. So I'm just going to leave the short on GME, and we'll see what happens from there. I would love to see it go to 150, but once again, nobody knows what's going to happen, and I don't pretend to know what's going to happen any more than everybody else. When you hear somebody saying this is definitely going to happen, know in the back of your mind that either they're lying to you or they don't know what they're talking about. Thanks for watching, everybody. I appreciate you. I love you, and I'll see you next time. Ciao.